Hello innovators, and welcome back to volume 2 of our psychology series. And in this particular volume, we'll be covering the brutal truth of trading and investing in both Forex and crypto. And the brutal truth is, you're going to lose. So it's time to figure out how to maneuver that better.
Exactly. And what we want to do is talk about the psychology around losing. We're thinking about potentially doing this a little bit further down the line in this psychology series. But then we thought, you know what does everybody really need help on the most? And it is understanding how to have the correct mindset and the correct psychology and how to deal with having losses. Because let's face it, we all have losses in the market. Whether you're brand new to the market and you're having big losses or blowing your account, or whether you're a seasoned veteran and you're 10, 20 years into the game, you still have losses. And that's something that we want to talk about in this video and correct everyone's mindset around trading. Having losses isn't bad. It isn't a bad thing. It's going to happen. You're going to have losses. No matter how good you are, or no matter how good you think you are still going to have losses. So correcting the mindset around your trading and losses and your expectations around losses can really change your trading for the better and really improve how you approach the market and how you trade.
Absolutely. I think when you're first introduced to trading, or something very similar to volume 1 that we discussed as well, is social media plays a massive role in all of this. And generally what you are exposed to when it comes to trading and investing is that everything is sunshine and rainbows. Win, 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 win. No one ever publicizes losses. The fact of the reality is you can be a billionaire trader, a millionaire trader, a very successful funded trader, you could be a scalper, whatever your strategy is, you're going to lose. And it's kind of what we touched upon in the very first volume as well. Therefore, what you need to understand is if losses are inevitable and losses cannot be avoided, you cannot let that deter you from becoming a successful trader. And actually, it doesn't mean you're not a successful trader if you lose or go down a losing streak. Instead, if that's the reality of trading, your simple goal is to learn how to maneuver and handle and weather those losses better, because they're going to come. Whether you like it or not, they are going to hit you out of nowhere. So your job as a trader is to learn how to make sure those losses are not going to damage you. It's like driving down a motorway and there's bound to be a pothole or a roadblock at some point. Let's say it's a pothole. If you are driving down a straight road and you know there is inevitably going to be a pothole at some point, you must maneuver differently, maneuver a bit more cautious, maybe turn around it, or just not go so fast to make sure it doesn't blow up your car's tyre and stop you dead in your tracks. That's probably one way I like my analogies.
That's one way of putting it, I suppose. But yeah, exactly what Tori's saying, and something like I talk about a lot with members. I even posted a video recently on my IG page as well, which was about this situation with trading. And for me, it's something that helped me become successful early on. When I was very early on in my trading, I gave some stories in the last video and having wins and losses. What really sort of set me on my path to being successful is I realized that I was going to lose. Again, just in a nutshell, I spoke about how I'd win 9 out of say 10 trades, but then I'd go big on the 10th trade and over trading, over leveraging at the very beginning, and I'd end up blowing accounts or losing big amounts of my account on that one trade. But then what set me apart and put me on my journey to success was waking up every day and changing my mindset and my approach to trading and saying to myself, I'm going to lose. I am going to lose. There is a very big chance I'm going to lose a trade today. And when you approach it with that mindset, I also told myself it's okay to lose. And that's something that a lot of retail traders won't tell themselves. And once you start telling yourself, look, I'm trading the markets, it's okay to lose because it's part of the game. You're going to lose if you're day trading every day, you are going to have losses every day. No matter what style your trading is, you are going to suffer losses, no matter how good or how bad of a trader you are. So then approaching the market and saying, it's okay to lose. For example, if you have in your strategy, sometimes out of 10 trades, you might win 7 or 8 trades. That's fantastic. That's a 70, 80% win rate. But a 50% win rate, only winning 5 out of 10 trades, it's also very, very good because with risk reward, even though you lose 5 trades, you can still be very, very profitable. So if you approach the market completely differently and not worry about having a loss, and then when you have a loss, you get pissed off or you get angry or you're over leveraging, when you approach the market and say, I know I'm going to lose, so you have the correct risk management because you know that loss can be at any time, and you also tell yourself it's okay to lose, then you'll approach the market very differently because you'll understand, okay, if I wake up in the morning, I have a loss, it's okay. You know, I could lose 5 trades out of 10 and still be profitable, even with a 2-to-1, a very minimal 2-to-1 or 3-to-1 risk reward. If you have a 3-to-1 risk reward and you only win 5 out of 10 trades, you're still up 10%. And that's a huge amount of profit. True. But most retail traders don't approach the market thinking on a zoomed out bigger version of a larger amount of trades. They only think about the next trade, and then they lose that, forget about it, onto the next one, or win a trade onto the next one. They're not thinking on a bigger scale. You have to understand that at any time you can lose a trade, but also understand it's okay to lose a trade. Don't throw, caution to the wind when you have a couple of losses, because out of 10 trades, you might lose the first 5 in a row, but then win the next 5. But you're still very profitable, even if you have a 2-to-1 risk reward. You're still profitable. But because most retail traders, sorry, I'm going off on one, but because most retail traders won't let themselves believe it's okay to have a loss, they'll have one loss, okay, they might be okay, they'll have a second loss, then they'll have a third, and they'll think, oh, okay, there's something wrong here, there's something wrong with me, there's something wrong with my strategy, and then they'll probably start over leveraging, or etc. But even if they stick to the risk reward, they'll have a 4th loss, maybe a 5th, and they think, right, something's wrong. Let me jump on social media, see what someone else is doing, or let me see what someone else's strategy is. Or even with their own strategy, start tweaking it. Think, oh, well, if I had just done this, and start changing things, and they won't stick to one thing. But if you just understand it is okay to lose, you're going to lose, then you don't start having these thoughts and doing these things once you start having a loss. You stick to your game plan, you ride it out, and you'll be successful over the 10 trades or the 20 trades or over the week, the month, or the quarter.
That's quite interesting because it's quite different with crypto compared to that kind of concept. Because with crypto, it's very interesting that people almost talk with, just to show the comparison between the two, whilst that is logically and should be applicable, especially when leverage trading crypto, especially if you're going into the depths of 100 times leverage or anything like that. But the kind of psychology behind crypto is almost, I'm not going to lose, I'm not going to lose, I'm not going to lose. And people will make a whole load of all-in style decisions with complete belief and conviction and no consideration of the downside whatsoever. There was an example of this. How many people do you see online that end up round tripping profits and riding a bull run the whole way up only for it to crash back down? The difference in crypto and the big contrast, I would say, is that a lot of people have significant levels of conviction and belief in something that they have no control over. And the problem is with that is people make very, very drastic life-changing decisions without ever perceiving or considering the downside. And I see this all the time, not just from new members that come to us, but just from general observations on X as well. A great example recently was on one of our live sessions. We had a member who had purchased BTC below $10,000. And even though it's trading right now above 100K, he was still a bit hesitant to take some profits off the table. And the problem is with that is most people look at it in one simple way. There is not just a fear of prices constantly going higher, but there is a lack of fear of prices going lower. And we see this a lot. People will always say the same thing to me. If I recommend taking some profits off the table, or I recommend not buying at a particular level, I'm often met with one common answer straight away. And that is a question which goes, what if it goes higher? I'm always asked whether it's to take profit or to buy at a particular level, which I don't think is safe. The immediate answer always is what if it goes higher? My immediate response is what if it goes lower? But it's interesting to me because not many people look at the market from that way. And that is exactly how I go into every single investment or trade I make within the market. I do not always look at the upside. I actually put more focus and priority on the downside because capital preservation is key. Now, again, this is a bit of a contrast to what Bernie's saying from his side, but I want to give my share of crypto. because consequences are fatal in crypto. And a lot of people go all into the bias that prices will go up forever. But when that inevitable loss comes or market downturn comes, you're then stuck within the market. In many cases, instantaneously going into 20, 30, 40, 50, 60, 70% drawdown. And in some cases, seeing the same level of percentage drawdown, if not worse, over a very long period of time, with a real inability to see the possibility of price coming back up to where you bought. And my biggest hack is really understanding in every single decision I make within the market, there's a probability it won't work out. And when you shift your focus and your bias to go into a position with an understanding it will lose from an investment basis, especially, you will make remarkably better decisions because you are no longer blinded by the possibility of the upside, but instead making much better judgments, understanding what the downside is. It could be something as simple as investing a bit less at a particular level, and like I always say, keeping cash on the sideline, because when price eventually goes against you, well, if you are all in to the market, there's not much you can do but sit and become emotional. And I guess it's the same concept with trading Forex without a stop loss, really, isn't it? It's if you go all into crypto, let's say at all-time highs, and price starts to drop back down, it's theoretically no different to holding a Forex trade with no stop loss. You know, if it blows 300 pips above you and you're close to being margin called, it's the exact same predicament. There's little room to maneuver, there's little room to think logically or clearly, and you're essentially a slave to the market at that point. And unfortunately, I'd say like 90% of people put themselves in that predicament at some point. I've done it.
Yeah, so we've all done it at the very beginning, and we've learned our lessons. And yeah, like I sort of go off on one, just my Forex tracked mind. It's good to actually hear the view on the crypto side as well. But the similarities between, like you're saying, are just in general entering the market and not looking at the fact that you can lose. You know, I think like in crypto, people enter the market and just kind of blindsided of going to the moon, you know, making millions overnight, etc., etc. And in a sense, you know, that is also true in Forex because of social media these days. But when you do start trading, you realize quite quickly, especially in Forex, that the losses can come quick and fast. And then obviously the journey is getting better at trading and having less losses. But something sort of created a problem with me at the very beginning, I've mentioned this in the previous video, is I'm a bit of a perfectionist. That's where sniper entries came from, etc. But I would sort of want or expect to get every trade and win every trade. And I think a lot of people still do. You know, it doesn't matter what group you join, you know, the group, they're going to have losses. But, you know, on social media, try and paint that everyone's winning 10 out of 10 trades or they win every trade. It's simply not true. Like you mentioned earlier, hedge fund traders, bank, you know, everyone loses trades. It doesn't matter if you're a veteran trading 50 years in this game. No one doesn't have losses. So, and it's all about risk reward at the end of the day. But there's nobody that doesn't have losses. And when I was very immature at the very, you know, infancy of my trading, I just sort of felt, probably because of social media, because everyone was painted the pretty picture that losses weren't a part of the game. And that's what we're here today to basically tell you that they are. But I sort of believed that I shouldn't be having a loss. So when I did have a loss, one, I was blowing accounts or losing big chunks of money, but I was more pissed off with myself for losing a trade rather than actually worrying about the money so much. And then it was, what set me on my path to actually being successful is because I realized, no, what am I doing? Like, I'm winning 7, 8, 9 trades out of 10 and then like losing a lot of money on one because I'm over leveraging. But then when I looked at my results, I was like, you're winning 70, 80, 90% of your trades. What are you doing losing like the majority of that on that one trade? Yeah. So then I looked at it and said, stop being an idiot. Like, understand you are going to lose. Like, I said this to myself, you are going to lose. And when you wake up each day and approach the market, obviously you don't want to be negative and you know, say you're going to lose today, because you probably will. But, you know, just having it in your mind that the loss can come at any time, whether you're on a win streak or a losing streak, or even if you're having like a mediocre month, or, you know, you're having some wins and losses, but you're still on top. But just no matter where you are of your trading, that loss can come at any time. And when you understand that loss is going to come, but also understand it's okay to lose, that will make you make sure that you stick to risk management. Because if you know that your next trade could be a loss, you're going to stick to that risk management because you're not going to over leverage. But with me at the beginning, it was like I expected to win every trade. So with that expectation, led me to over leverage because I wasn't thinking about the downside. I wasn't thinking about, well, what if this goes against me? Because I just thought I knew how to trade, that I was the best, that I could just take every trade and expect every trade to win. Honestly, I think we've probably all been there. Whether it's on the back of a winning streak or when we first start trading, we probably have been at that point where we just expect to make money from the market. Sometimes this even happens worse when you are on a winning streak, because you actually just expect to just keep making money and keep taking money from the market. And you don't, the greed and we're going to talk about this in a future video, but the greed overrides your mind. You just keep taking trades. You don't even expect to lose. But then that loss comes and you're over leveraged, or the greed has got you, and then you're back to square one again. But when you just approach the market and just say, like, I could lose today, or I might win 2 trades today and I might lose tomorrow, but you always know the loss is coming. So you always make sure that you're using risk management. You're always looking for the what if. So you never venture into that over leveraging or, doing these silly retail mistakes, because you know that next trade could always be the losing trade. So you always have to make sure that you're managing your risk to make sure that you don't let that next trade ruin your good work, which could be 5 out of 10 trades, still very, very good. But again, most retail traders, they think that if they lose 5 trades, I thought it was a problem losing 1 or 2 out of 10. But most retail traders think that if you lose 5 trades, that you're a terrible trader. You're not. Because if, again, a simple 2-to-1 minimum risk reward, you're still profitable even if you lose 5 out of 10 trades. You can even lose 4 or 3. There's some hedge fund traders that could lose 6 or 7 trades out of 10.
Very true.
But because their risk reward is a minimum of 2, 3, 4 to 1, they're still profitable. So there's nothing wrong with your strategy, but it's just that the psychology around it, that once you start losing, you start getting nervous, emotions come into play, you start doing things that are outside your trading plan, outside your strategy, and that's where the issue is, because you start tweaking or doing things that you shouldn't be doing and you don't stick to the trading plan. But if you fully accept that losses are going to happen, then even when you have 4, 5, 6 losses, you understand, stay calm, this is all part of trading. You're going to have a bad month throughout your trading career, you're going to have a bad period throughout your trading career. This might be one of them. Just keep doing what you're doing, stick to the plan, understand losses are okay, and just keep going. And don't make any stupid mistakes. Don't do anything silly. Just stick to the plan and you'll come out the other side. But just remember that losses are going to happen and they are okay.
You made a good point actually about even hedge funds, because every successful trader I've ever met in my life actually focuses more on capital preservation versus focusing on winning. And this is what a lot of people fail to realize, and this is why I almost call it a hack, a life hack, and even a mindset trick and hack in theory as well. Because when you shift your focus to actually preserving and saving your capital, instead of just prioritizing making money, you're inevitably going to make money and more money in the long run. This is not a game of how quickly and how fast can I get rich. It's a game of survival. And as Bernie just said, and as I've covered as well, when you make a fatal mistake, there is no survival, there is no recovery, it's game over. And in fact, the only way to realistically get yourself out of a very drastic loss is either to work very hard and make the money back to redeposit that money, or go ultra gamble degenerate mode and try and flip it all back. And I'm sure you guys have done that, because I have, and it doesn't end well. Whatever is left, you generally will lose straight away as well. The key here is to understand, again, going back to the crypto element of things as well, is that every mistake is fatal and you need your money to make money in this game. And by doing stupid things and focusing so much on winning, and like Bernie said, when you get into a phase where you're actually starting to win too much, it can be just as dangerous as a losing streak, because it brings you this overwhelming self of confidence and also just ego. It will grow your ego, because I've done this, and I have done this many times when I started off, and especially when I started to make good money from the markets. my ego would consume me. I would be like, I am fucking
We have to
untouchable.
we have to do a separate one on this,
Yeah.
but I think it's
Maybe I shouldn't go deep into this, but
no,
ego
but yeah,
is a big
carry on.
one.
But I just think it's potentially even
Yes.
worse than maybe losing streaks.
It is.
Because of how it makes.
Because you feel like
Your
Superman.
ego comes
You
out,
feel
yeah.
Like, I'm not going to go too much into it actually, because Bernie's made a good point. There's actually a pretty good future video to do, but essentially it will detriment you, and your ego will play a role.
It's crazy.
So what I will say instead, to show another comparison, is again, I'm going to keep it more crypto related, because for me, it's what I see on a daily basis and what I've experienced myself. And a great example for me, a lot of people, again, as an example, we have survived every bear market. We have survived every bear market. We have not lost everything. And an unfortunate trait of most people in crypto is they make a lot of money in bull runs, but by the time that bear market comes, there is niche left. They are left with nothing but losses and nothing to show for their hard work.
And a screenshot.
And a screenshot of what was, we've been there. That's a story for another day as well. But I learnt my lesson. I learnt my lesson from 2017. You guys know I was very, very early to the game. I was dabbling in crypto around 2011, 2010 or so as well, even up to 2012, but not seriously. But 2017 was where I really got involved heavily, and Ethereum was my great purchase. It was $6 I averaged into Ethereum and pretty much rode that the whole way up. Now, I made a lot of money from F and took a lot of money in profits out of F, but I still lost millions in the 2018 bear market. Once that CME futures hit and BTC peaked at 20K, I lost millions. And although I had made millions in the process, losing that much money hit me to the fucking core. It hit me deep in the soul. And this is the key behind it. We are all going to make the mistakes of either round tripping profits, blowing accounts, or even doing stupid things like swapping coins into other coins and ending up with nothing in the grand scheme of things. The key here is to understand when you experience these things and the pain it brings, and also just the anguish of knowing that you have to recoup that money back, you have a choice in that very moment to learn from that decision and understand what stupidity you've done to ensure you do not do it again in the future. If not, you will never learn from your mistakes. And the pain of what I lost in 2018, again, if I had not taken any profits, I probably would have been in a very different situation mentally right now. But I fortunately saved myself by taking enough out to counteract some of the losses. But just seeing the losses that I witnessed, and we kind of had a fair share of those ourselves in that moment in time. Again, another story for another day. But that moment changed me completely. And that's why I am a very conservative investor in respects of I do not go all in or invest very heavy sums unless I see prices that almost guarantee me a significantly higher reward than a risk to the downside. And that often means buying in levels that most people are too scared to buy into. But the big loss I suffered in 2018 changed me as a person, and it made me go back, hit the drawing board, and redefine my whole strategy. But I'm very grateful I also enjoyed it back then, because now I've managed to survive every single bear market since, which unfortunately is not the case for most people. And sorry to keep yapping and rambling on here, but we've had many bull markets in crypto. The problem is with bull markets in crypto, quickly tying back into the ego, is it activates easy mode. You're not a genius in a bull market, but the illusion of prices rising so fast and all of the things you touch turn into gold can also blind you to completely disregard downside. This is very common in crypto. We will never see those prices again, or we will never go down there again, or it will take something horrible to happen or some kind of black swan to bring prices down. But they come every single cycle. And if you were too blinded and focused only on the upside, you will have nothing left to show when the downside comes.
Yeah, and I think the reason we're doing these videos are to help you and help your mindset and psychology, obviously, around losses. And the thing is, probably 99.9% of people watching this know exactly what we're talking about because you've been there and you've had that loss or the big loss. But just going back to what you said, 2017, you had that huge loss. So did I. And I was new to crypto at the time. But yeah, I'm almost thankful that happened, because then it changed how I viewed the market or the crypto market and changed how I behaved with the crypto market from then on. Going back to my Forex stories, it was a similar situation. It was after a huge loss in the market. which really was gut-wrenching. And I'm sure we've all been there. I had this gut-wrenching loss. I don't know if I've got into it in detail, maybe that'd be another video as well. In the early days, I had this gut-wrenching loss, and that was actually, I didn't know it at the time. And this might have happened to you guys recently, or it happened to you when you were trading 6 months ago or a year ago. But I didn't know it at the time, but it was the best thing that ever happened to me. And it was probably the best loss and the best money ever spent, because it taught me a bloody good lesson. And it was that moment, like there's a meme on Instagram where, the guy's looking at himself in the mirror. I had that moment.
Why are you like this?
Why are you like this? But I looked in the mirror and I was just like, how have you let this happen? You've gone outside your trading plan. You didn't do what you were supposed to do. And I made myself a promise that day. I was like, this is it. Like, this is the last roll of the dice. I'm sticking to my word this time. Discipline has to come into play. And if I'm going to give it like 6 months of just being disciplined. I've said this in the last video, a year. And no matter what, I'm not straying, because I'm not going through this pain again. And if I don't do it this time, then that's it. And then it all clicked, because I literally stuck to my word. And the pain of the loss is what kept me on track. And again, going back to what I was saying earlier, it's okay if that's happened to you. Just like I said, it's okay to approach the markets and understand you're going to have a loss. When I'm talking like that, I might need to clarify, I'm talking your 1% loss. So, you're risking 1% of your account, and understand, okay, I could lose 1% today. I could lose 3 trades. I could lose 3%, 1% on each trade, but it's okay, because I'm only ever going to risk 1%. But I know that every trade I take is a 2 to 1, 3 to 1 minimum risk reward. So even if I lose 5 trades out of 10, I'm still going to be winning. But understanding it's okay to have a loss like that is very, very important when you approach the market on a daily basis. But if you've been in the situation that we've actually gone into in the crypto crash, and you've had that, I'm sure you've had that scenario in Forex where you've had a huge loss and blown an account, that is also still okay, because that's part of the trading journey. But as long as you don't keep remaining in the wheel of the circle of death, where you keep doing the same thing and never learning from your lessons, then it's time to stop. Because you need to be able to learn from your lessons. It's okay having losses as long as you're learning from them. But going back to just in a nutshell, it's okay to lose. Tell yourself that, because you are going to lose. But those big losses that happen in the early day are because you probably didn't tell yourself it was okay to have a loss. And you were, once you start going in the red, you take a trade, you start losing a bit of money. Mm-hmm. So let's say a Forex trade. You have a trade, you have a 20 pip stop loss. You place a trade, it starts moving against you. You're thinking, oh no, let me move that stop loss a little bit, because I don't want to lose that money. You see you're down a couple of £100 or whatever. So you move the stop loss, and then it keeps going up. If it's a short trade, it keeps going up to, you're like, oh, now I'm not willing to lose £500. I was only willing to lose 100, but I moved my stop loss. Now I'm down 500, so you move your stop loss more. Then it goes, next thing you're down 1,000, or then you remove your stop loss, and then you end up blowing accounts. See, that all comes and all stems from not understanding it's okay to lose, because your ego, just like when you're on the winning side of the market and your ego can really just take full control of you, when you're losing, if you don't understand that it's okay to have a loss, like it's like it's a human hardwired situation that you just can't accept losing. Trading goes against all human instinct, and you have to overcome the way that humans are hardwired to be able to be successful in this market. You need to take a trade and understand that it is likely had a good chance of losing, because you cannot control the market. You have your edge, but no matter if it's the best trade setup you've ever seen with 15 different confluences as to why this should play out, it can still lose. Mm-hmm. And that's the problem. You just have to understand that you can always lose at any time. And when you approach the market with that view and that mindset and psychology, you'll be a much better trader, because you'll cut out all the silly mistakes that you'd make when you come to the market each day thinking, all I'm going to do is win. And just to what you said earlier as well, really don't even see yourself as a trader. See yourself as a risk manager. And that's,
I like that.
It's a really, really, you know, if you just wake up every morning and think, right, I'm a risk manager, not a trader, not here to make money. I'm here to manage my risk, manage my capital. Just like you said with crypto, preserving your capital. Wake up every morning and say, right, today, not I'm going to trade. Wake up and say, right, today I'm going to manage my risk. I'm a risk manager. So what you're always doing is managing your risk. So every trade you're taking, you're managing that risk, whether it's moving your stop loss to break even. If you get stopped out, you can re-enter, for example, or you're always making sure you're only risking a maximum of 1% per trade. But whatever you're doing, you're minimizing the losses as much as possible so that you can maximize the reward. But it's always about understanding it's okay to lose because you are going to lose. So manage that risk. And if you manage your risk and you have risk reward, you will be successful. If you can do those few things, I guarantee you'll be successful.
Yeah, absolutely. I mean, if they're inevitable and they're going to happen, your goal is to make them as least damaging as possible.
Perfectly.
Simple as that. They're going to happen, they're going to come, and they are going to come either, depending on your mindset, when you expect it, which will be every single trade. And I'm not saying you'll lose every single trade, but the point is when you understand that every single trade, there is a likelihood there will be a loss, it will allow you to maneuver those trades differently. And again, I'm going to tie this back into crypto. As an example, which can be more related to Forex as well, the differences with crypto is a lot of people don't use stop losses, they use liquidation levels. Essentially, you place the trade, you slap on your margin, and wherever your liquidation level is where you will lose. The key to understand with that is it could get hit, as with a stop loss. But you need to ensure and understand if there is a probability that liquidation level will be hit or the stop loss will be hit, you need to ensure it is not the entirety of your account. And this is where it all comes down to moderation, whether it is spot or leverage. Let's say it's a spot trade. I know what you guys do because I have done it many times. I would place a spot trade, let's say whatever price, let's say you buy BTC at the current price of, let's say $106,000 or $100,000. Now, let's say in your current account, your current exchange account, portfolio, platform, whatever, you have $1,000. Now, if you were to buy BTC right now at, let's say, $100,000, you need it to go to $200,000 to 100% your investment. Now, many people will do that because they won't be looking at the downside, but simultaneously you would want to look at that and go, well, first of all, if I am willing to take this risk, do I want to risk the entirety of the $1,000 in my account or pounds? And how much of that can I afford to lose? That is also a big question to ask yourself when it comes to trading, leverage, Forex, crypto, any type of trading or investing. How much of what is in your account are you actually comfortable losing? And when it comes to an investing basis, it's again why I recommend keeping capital on the sidelines, is because you want to almost slowly dip your toes in the water step by step. Now, as an example, you've got 500K in your account, but that is your entire life savings, or 100K, 50K, whatever that number is. If the money in your account means a lot to you, you should not be risking the entirety of that money in your account. It's the same as a Forex account. If you have 100K of live funds that you own, but that is everything to your name, you should not be risking the entirety of that on one potential trade with enough conviction to believe you're going to win. And that is how things will begin to change for you. When you always buy, you'll buy and you assess the target. We've probably done this, or I've done this. I don't know if you've done this with crypto, but let's say when I've bought crypto before, I've been so blinded by where it could be, and I've almost premeditated this figure in my head. So I've made buys before where I go, right, if price hits this particular level, I will have X, Y, Z in terms of profit. And being so fixated on what is up above can often distract you from what's down below, if that also makes sense. And you can be so blinded by what could be up there that you completely forget about what could be down there. And more often than not, when you're so fixated on what's up there, price will eventually go down there, and you are not really prepared for such a situation. It's about minimizing damage as much as physically possible, because the harsh losses, those real drastic losses where your account's down 90% or you've blown your account entirely, money doesn't grow on trees. You don't just...
It's a long road back.
Yeah, and unless you come from a billionaire family that's going to constantly, or a trust fund that's going to constantly reimburse you. The brutal truth is none of us are really within that category. So we have to work for the money. You have to earn that money. And as always, something I often say, if you are currently working a 9 to 5 or any job you're doing, even if you run a business, always compare how much it takes you to make that money in the real world as it does within the market. And more often than not, we've had this before where new members have come to us and they've said, hey, Bernie, Torre, we've got 500K in profits right now. This was during like the 2021 bull run in particular. They'll be like, bro, I've got 500K right now in profits. What shall I do? Like, do you think I should sell? I'm like, how much do you make in your current workplace? They'll be like 30K, 40K a year. I'm like, what? I'm like, bro, you do realize like this may not happen again. You also need to have gratitude for when these things are presented to you. But it's insane to me because I've seen it so much where people could be making 30, 40K a year, have 1 million in profits. And we've had these instances before. And it's why we do these videos, is because we don't just have our own stories, but we have stories of people that come to us who we help overcome these hurdles. Not everyone that comes to us is a beginner or a loser. Some of them are actually significantly profitable and have millions and millions of pounds and dollars, but they still suffer from those issues. And that will actually be something to delve into a bit further in a future video as well. But you have to remember, losses, in a nutshell, are going to happen. Even if you are in the depths of profit, it's kind of like holding, I guess, to compare to Forex again and bring it back and forth. It's, let's say you've got a trade running on Forex that's like, God knows how much in profit. You have to take something off if it's a real significant trade. There's, enough, you have to know when enough is enough. You may not need to close the entirety of the position, but let's say with crypto, your trade is running in so much profit, it can make you think that you cannot then turn that into a loss. And I've seen it time and time again, not just with ourselves, but with other people as well. And if you slowly just learn to chip away, whether it's leverage or spot, if you chip away a bit of profits, you're not going to make as much as you mentally had in your head, but you are going to protect yourself. And this is a bit of a hack for crypto in particular, is let's say you bought BTC at like 10K and it's now trading at 100K. Even if you took out a little bit of profit at every $10,000 incline in BTC, you won't have as much as you've mentally prepared in your head if you held it all, but you've significantly reduced the risk. And when the inevitable rollover comes through or some form of significant crash comes through, you leave the market a winner. And that's the goal here. Remember that. It's not just surviving, but it's continuously being profitable. And if you gamble everything on the outcome of one single trade, you won't be here very long. And 90% plus of traders that quit or lose are doing exactly that. They are turning what should be longevity in a career into outright gambling. You're far better off. It's the same outcome as just going to the casino and throwing it all red, remortgaging your house and going all in on zero. It's the exact same outcome.
Yeah, I think what you were saying about, like, there's a few other subjects you've sort of mentioned today that are going to be good for the future psychology episodes. One is, talking about actually taking profit, the psychology around taking some profit. Crypto, probably very different than Forex, because Forex, you're taking trades and you're risking 1% and looking to make 2, 3, 5, 10%. But obviously, crypto can be, you're up thousands of percent. And another thing I think we should talk about in a future episode is, the problem is that, as you said, everyone's looking for how much they can make. And the problem is that a lot of traders will be up, let's just say in Forex, you're up £1,000. I'll use a Forex example. It's probably a lot more in crypto. People can be up 10,000, 50,000 when you're investing in crypto. Let's say Forex, for example. So say you take a trade, you're up £1,000. So then you think, right, that's how much I should make from this trade, or you might be trying to wait for it to go up a little bit more. But when price pulls back from £1,000 to say like 700, it might have been more, even if you were only aiming for £500 originally. But the fact that, let's just say you took a trade and it blew to the upside and now you're up 1,000, you're like, shit, great, I'm up 1,000. Let's see if it can go more. And then it doesn't go more, it starts pulling back down to 8 or 700. There's a psychology factor with trading where people are like, no, I'm going to hold it until it goes back to 1,000. And that kills so many traders. Like these round significant levels, or like these round figures, you like, oh no, if it goes, when it was at 1,000, you're probably thinking, if it can go to 1,500, I'll take profit. Guarantee if it went to 1,500, you wouldn't have taken profit because you would have said, no, now I'll go 2,000. But it pulls back from 1,000, goes to like 700, and you're like, oh shit, oh, please, if it goes back to 1,000, I'll take profit this time. And then it goes down to 6, and it goes down to 5, and then you're at where you originally targeted, where you would have been happy when you took that trade, you would have been happy with the 500. But now that you've been at 1,000, come back down to 500, your psychology and the human instinct that you're hardwired is now telling you that you're losing, but you're winning. It's crazy. So then you're like, I'm not taking 500 because you think you're too good for that. And then you're like, you'll wait for it to go to 1,000. Then it goes to 4, then 3, then maybe back to 5, and then it goes down back to 4, 3, 2, and then sometimes it can even go back to break even. Or the most craziness is when then people actually keep holding and end up having a loss. It's the same thing on the flip side when you're in a loss and then you were willing to lose a certain amount. Like let's say you were willing to lose £200. But then as you're at like 190, you're like, I'll just move my stop loss a bit. And then you end up losing a bit more and a bit more and a bit more. So there's definitely lots of topics there to talk about in the future episodes. But again, I think that it's good to start off today with what we're saying, because those two subjects that I just said all stem from, not approaching the market correctly and not having the correct mindset. And again, psychology, the reason we're doing this is to help. And because psychology is 80-90% of the market, there's so many little things like we've just mentioned, and there's hundreds more that we can talk about in the future. But there's so many things that psychology affects, and we've probably all been there. Things I've just said, you've probably done. But we want to start off and build the foundations of this series, and lay the foundations and get the mindset right first. And that's why I think today's video is so important, is to stop these things that we're going to be talking about in the future happening. It all stems from having the correct mindset and approach to your trading, which is what we're talking about today, is that you need to be a risk manager, not a trader. And you need to understand that you are going to lose. You will lose. No matter what you do, you're going to lose. So if you know that, minimize those losses, just like Tori said a minute ago. How crazy can you be to know that you're going to lose trades, but then you don't manage your risk? Like, it's literally as simple as that. But 95% of retail traders continue to lose and continue on the circle of death because they just keep making all the retail trader mistakes that we've just said. It's that crazy. If you know you're going to lose, why won't you manage your risk? And that's what we're just trying to get that point across. You are going to lose. I know this doesn't sound as good as what a lot of other YouTube channels might say, and just say that you're going to make £1 million if you start trading with us, you're going to be a millionaire overnight, etc., etc. Unfortunately, we're here to tell you the truth and the cold, hard truth. But hopefully by doing this, we're going to save a lot of you time, money, anger, and a lot of those gut-wrenching moments by just hopefully taking on board, hopefully what we've said is hitting home and can make you, motivate you to say, you know what they're saying is right. From tomorrow onwards, I'm going to be a risk manager. I'm going to forget about making money. To take making money off the table right now. Making money will come if you do the hard things right. If you become a risk manager instead of a trader. If you never risk more than 1% per trade. And again, I'm thinking more about Forex. Tori will give you the version on crypto. But if you say that you're a risk manager every day, not a trader, if you're a risk manager, if you never risk more than 1%, and you approach the market each and every single day, understanding that you could lose and that you will lose, and that when you do lose, it's okay to lose. It's absolutely normal. Do not be hard on yourself for having a loss. Don't let your ego get bruised for having a loss, because there's millions of other traders out there on the same exact day having losses just like you. And the successful ones are not crying about it. They're moving on to the next trade with risk reward, and they're making up for the losses in one trade. So if you approach the market like that, all of these other issues are not going to happen to you, and you're going to cut them out of your trading and then be successful.
Precisely that. I mean, the best way to be a winner in the markets is to understand that you're continuously going to lose in the markets. The simple reality of that, and like Bernie said, the reason we do these videos is because hopefully you guys can relate. And instead of selling you a dream, we can share our personal experiences, but also relate to you guys so you can understand that you are not a loser for losing in the markets.
Exactly.
It doesn't make you a loser. It doesn't make you a bad trader. It makes you a completely normal trader. It's just because it has been perceived as this, who publicizes losses proudly? No one. No one wants to tell you that's the reality of trading, because it's so much easier to sell you a dream. And this is where a lot of people go wrong as well, because it's sold as this illusion of continuous wins and success and all of this stuff. It makes you lose more and doubt yourself. And this is what contributes to so many people losing. When it's glamorized as this continuous streak of win lifestyle and you experience losses, you will blame yourself and point the finger and go, what's wrong with me? What's wrong with my strategy? But the truth is, it happens to all of us. And most of the people that experience them cover them up. And if you are a successful trader, and even like Bernie said earlier, if you look at hedge funds, they publicize the losses. They publicize the bad quarters. In the collective grand scheme of things, they're overall very profitable. And that's because they understand how to make those losses less damaging. And that is your goal. As Bernie said, be a risk manager. When you know those losses are coming, they may not be when you expect it. And in fact, they may come when you least expect it. And not to scare you from taking trades, just understand not every trade is going to work out. And when that reality is understood, you will not do anything stupid. That's kind of the whole topic here. Don't do anything stupid, because the consequences are fatal.
And I was going to let you just finish, but you just said something, so I'm sorry.
Do what you need to do.
But just talking about fear is a very good point that Tori just made. And we get asked this question a lot on DMs. It talks about fear around trading. But if you do what we have just explained in this video, you will cut out fear. The reason a lot of people have fear is because they're over leveraging or they're very emotional when they're trading, because they're not understanding that you are going to lose. So they're over leveraging on the trade, or even if you ask, you're new to the market, you're just scared about getting into the market and scared about placing a trade. Again, that's because you don't think it's okay to have a loss. So you're scared of losing, but why are you scared of losing when everybody loses? Everybody takes losses. So why are you scared to trade? It's because the perception is completely wrong. If you tell, and what we're trying to do here, tell that trader who says that they're fearful of getting in the market or they're scared of taking a trade because they're scared of losing, simply, well, what are you scared of losing for? Don't you understand that you're going to lose on a daily basis or a weekly basis? They just don't understand that at an early point. They think that if they lose, that they're wrong, or that they're not a good trader, or that they're doing something wrong. But no, you should have absolutely zero fear in having a loss, because it is completely normal to lose.
You just made a very good point. I don't want to continue too much more, but it's true. The fear doesn't actually come through until you actually go into a horrendous loss. Because a lot of the reasons you even get into a position where the losses are so fatal is because you're completely blinded and delusional to the reality there will be losses.
But you have a fear of losing, so then you hold on to the loss, and just won't cut it short, and then you end up blowing an account because you're fearing the loss. But if you understand you are going to lose, let your 1%, let your stop loss hit, and be done with it. You're not attached to that trade anymore. On to the next one. But most people are so scared of losing that once they're in a loss, they're like, no, I can't lose this trade. Let me keep moving my stop loss. Or crypto is obviously very different, not stop loss, but liquidations and so on.
It's people just want to show a pure blue MT4, or crypto traders just want to show that pure green like Binance P&L. But the reality is there's going to be a loss. But most people just allow those losses to reach levels that are beyond recovery. And that's kind of the whole point of this as well. It's just understanding you're going to lose. The title of this video is You Are Going to Lose. And I would say the ending to this video is You Are Going to Lose. Nothing wrong with that. Doesn't make you a bad trader. Doesn't mean there's anything wrong with you. Doesn't mean your strategy is not working. Happens to every single one of us. The only difference is the ones that are still here are the ones that understand that and know how to survive, minimize the damage of those losses. And remember, this is a game of survival, and you will be here forever and not just for 1 or 2 trades.
Yeah. And yeah, just to finish off, I think, the title of this is You Were Going to Lose, which isn't very glamorous. We could say you're going to be a millionaire, but
That was your idea at first.
But in fact, by saying you're going to lose and telling you what we've said, you will be a millionaire if you follow what we've said in this video. So it is actually, the other way around. So hopefully you've taken some points from today's video, as hopefully we've helped you in some way just to see a different perspective. And hopefully you've been able to take something from it, and hopefully it motivates you to not worry about those losses. If no matter what scenario you're in at the moment, where you've had a losing streak, a winning streak, or you're just floating and sort of mediocre, not really having wins or losses, but just understanding what the approach that we're explaining and approaching the market in a different way can hopefully help you and give you that motivation to stick to risk management, stick to being a risk manager, and understand that losses are part of this business. They always have been, they always will be. So there's nothing wrong with having a loss.
Okay. Well, if you want to be a winner, don't be afraid to be a loser. We'll see you guys in volume 3.
See you soon.
See you soon.